And so, with non-farm payrolls in general, I think it's important to realize that there's a couple of very strong leading indicators that tell us that job growth this month is going to be healthy. Aside from the natural rebounds that you would anticipate after such an abysmal report in May, if we go back to June, for example, or we go through the data since June, for example. Let me just pull this up. We've got a number of leading indicators for non-farm payrolls that we typically follow. And the leading indicators for non-farm payrolls are basically the following. They are challenger. We already went through some of them. Hold on a second. Basically challenger layoff reports, and it's a smaller amount of challenger layoff reports. We actually look at 8 leading indicators for non-farm payrolls every single month. And so one of them is challenger layoffs. So there's fewer layoffs. ADP reported a rise in job growth, but this is not really a major increase. I mean, I think the market was hoping for a number greater than 200,000. Jobless claims have been very low, but low jobless claims does not less firing does not equal to greater hiring. And the greatest risk going forward is that the uncertainty in Europe could delay a lot of hiring decisions in Europe as well as in the US. ISM non-manufacturing index is actually the most important leading indicator of NFPs, and that's really what gives us the greatest cause for optimism, because we look at the employment component of non-manufacturing ISM, which basically measures service sector activity. We saw the employment component rise from 49.7 to 52.7. So a very, very nice increase. And that increase definitely bodes well for the report, and I think signals to us that we could have greater than 200,000 job growth. Manufacturing sector also saw an improvement. We had contraction in May, and that returned to expansion in June. So both numbers signal a lift in labor market activity. So right now we looked at 1, 2, 3, 4, 5, even continuing claims are lower, 6 items that tell us that job growth should be better. And the last 2 are basically confidence measures. Consumer confidence index rose very nicely. And then the University of Michigan Consumer Sentiment Index, look at it from a historical perspective, it's the only one that kind of faltered a little bit. So every single quote unquote leading indicator for non-farm payrolls that we follow tell us that job growth should be better. And